Welcome to How to Make Money in Stocks with Investors Business Daily, featuring market commentator and host of the IBD Market Wrap, Amy Smith, and Matthew Galgani, host of the IBD Stock Analysis and editor of the IBD Extra newsletter. Tune in each week as we use history, not hunches, to help you stay safe in today's market and get in early on tomorrow's winning stocks. Now, here's Matthew Galgani.
Welcome, everyone, to another episode of How to Make Money in Stocks with Investors Business Daily. We have a very tight show this week. We're going to sit down with Irusha Peiris of MarketSmith. But first, let's take a quick look at the market.
Well, the index has remained range-bound. The Nasdaq has had trouble getting more than 2% above the 5,000 level, and the S&P has been range-bound as well. Despite that, there are pockets that are working in the current market. We have tech and healthcare remain strong. The latest Fed minutes were released indicating that a rate hike was unlikely in June, and then Janet Yellen spoke on Friday morning. She said the job market was improving. The pace of rate hikes is probably going to be slow. She did indicate that we are still on track for a rate hike sometime this year, but everything that she said was pretty much in line with expectations, and the market kind of yawned.
Right, and we are still in an uptrend, but as we say all the time, it's been a bit of a rocky market. But there are stocks that are setting up. In this week's IBD Stock Analysis videos, we talked about NXP and CarMax, both of which are near potential buy points. But again, if you buy in this market, be sure to keep any trades on a short leash.
In the Market Wrap video this week, I talked about analog devices, which was breaking out. I talked about Momo, that also broke out. Those stocks were up very nicely for the week. So if you need some ideas, tune in to the videos.
Imagine a Sunday morning, coffee in hand, you turn on your laptop or tablet, and you see a handful of stocks near a potential buying range. That's what you get with Leaderboard from IBD, a timely watch list put together by our market experts, and it's updated throughout the week with alerts to any buy or sell signals. The results? In 2013, Leaderboard has more than tripled the performance of the S&P 500. So to see what's on the list right now, get a free trial of Leaderboard at investors.com/radio show. That's investors.com/radio show. Welcome back to How to Make Money in Stocks with Investors Business Daily, featuring market commentator and host of the IBD Market Wrap, Amy Smith, and Matthew Galgani, host of the Daily Stock Analysis and editor of the IBD Extra newsletter.
We are very pleased today on the show. We have Irusha Peiris, and I'm very lucky because we have him every month at Santa Monica Meetup. He also helps out at Manhattan Beach Meetup. He's a great guy. He is a national speaker and a product coach for MarketSmith, and we've both been here about the same amount of time. We came within like a week of each other, been here about 5 years. Irusha also does fantastic MarketSmith webinars. So Irusha, talk to us a little bit about what you've been discussing on those webinars and when the customers call in about the current market.
Thanks, Amy. Thanks, Matt. You're not alone out there listening to this. These are frustrating markets, right? And for our kind of system, our style, these choppy markets are the most difficult markets. And that's what we're seeing now. We're seeing these really tricky markets where you're not seeing a very consistent trend. And as a result, that's just going to cause a lot of the stocks we like to look at and try to trade. They're going to be that much choppier. They're going to move quicker, things like that. So you're getting stopped out a little bit more, and it's harder to get traction at this point. So if you're feeling frustrated, we're feeling frustrated here too. And you're not alone. That's the big thing here. But you kind of have to just be consistent. You kind of have to go over your rules. Still try those breakouts because in the end, it is a numbers game for all of this.
And that has been the frustrating part about it is it changes. It seems almost day to day, week to week.
Right.
We're in a correction. We're in an uptrend. We're under pressure. Things are working. Things aren't working. It's been so difficult, like you said, to gain traction either direction. There hasn't been a clear sell-off. There hasn't been really, for a lot of stocks, a clear, nice breakout with continued movement higher. So it is a tougher market. And especially if you're new to this is like we were talking about the other day with like surfing. I'm not a surfer, but if you were starting out, you wouldn't just jump into the big Honolulu waves and just go for it.
Well,
right?
Matt, you
No,
might.
I definitely would not. I definitely would not do that. So it's a trickier market. So if you're going to buy breakouts, if you're going to invest in this kind of market, you have to make sure that you have good sell rules, especially good buy rules as well, and hopefully have a little experience with this kind of market.
Yeah, well, one thing that we talk about in the webinars a lot is you want to look at really 3 areas. You're looking at the overall market. IBD does a great job with the big picture, telling you about distribution days, follow-throughs, and so you should all be reading that every day. But in addition to that, you want to be looking, okay, how are the leading stocks acting? Now, if IBD puts it in a correction, what you should be asking are the leading stocks acting like they are in a correction? Right, so that's going to give you feedback. And then finally, the third area is your portfolio. Are you getting traction, or are you giving back too much? So we like to use all 3 areas to get an idea of really the underlying strength or weakness of the market.
And Irusha, something that you and I were talking about is the earnings season.
Yeah.
And I mean, it went both ways. But one thing we all discussed is that the earnings season was more harsh, certainly, than in the recent past. I mean, you have Twitter and you have LinkedIn, you had a couple other stocks that just smashed.
Yeah, and I'll be honest, with the first couple of weeks of earnings season, with some of these big time gap downs that we saw, I finally thought, okay, this might be it. This might lead us to that correction. Now we're really starting to see some of these stocks they're getting taken out to the woodshed.
And then we had a lot of distribution days on the count.
Exactly,
so we were all
yes.
looking at this thinking, here we go. Now we're going to correct. And then we had a follow-through day.
Right, and before we had the follow-through day, what I was going through the MarketSmith Growth 250 that weekend before. So one thing you want to do is always have a consistent routine regardless of the environment. So here I was on Saturday, I was just going through it, flipping through the charts, seeing what was coming up on the Growth 250, and all of a sudden it clicked to me. It's like, there are a lot of bases out there. I might not be as familiar with all these names because a number of the stocks that I liked, they did get taken out, but there were enough bases, and so anytime I see enough bases in the Growth 250, I'm always thinking, there's a chance here. We have a little bit of a chance here that if you get some kind of catalyst, there may be enough leaders to take us up for another leg.
And of course, we're all trying to make money in the market. But you guys, in one of your MarketSmith blog posts, made a good point, and I think Amy mentioned it on last week's show, the idea that, of course, we're all trying to make money. But in this kind of roller coaster market, job number 1 is really to manage your risk.
Absolutely. I will tell people on the webinar and even on the phone is that, hey, if the market's up like 5% right now and it's been kind of choppy and you're at 0%, don't be too hard on yourself because you're surviving right now. It's so easy in this kind of choppy market, it's a kind of a chop higher kind of market, to be down a lot in this because you're buying high, you're selling low almost all the time. And naturally, you're going to start getting frustrated, you'll get emotional, and then you might hang on to some of these stocks and say, I have to make it back. Maybe you got hit on the earnings. I have to make it back. Let me double down on it. And now you're even in worse shape.
Well, and something that Jerry Samet says, he helps out at Santa Monica meetup and he helps out at some of the other meetups. He said those little givebacks in the market can end up being a lot in your portfolio if you just keep playing and just keep playing and you just keep playing. I think there's a 3 strikes and you're out rule that Bill talks about. If you have a couple of bad trades in a row, 3 or 4 or 5, maybe just stop for a minute. Yeah. Back up just a bit, and that's what Irusha was just saying right now. If your positions aren't working, that probably tells you something about the current environment. Now, if you're looking at the IBD 50 and a whole bunch of stocks are working and your positions are not working, maybe take some time, do a post-analysis, and see if you're picking the right stocks at the right time.
Exactly. The way we say it is you're out of sync with the market, right? Or either it's the market or either it's you, right? If you find yourself being consistently wrong on the trades, you do want to take a step back. Definitely go in smaller positions and reduce your overall portfolio exposure too.
And Mike Webster, who's a portfolio manager here, made that same comment when he was on this show a while back talking about, I think it was Monster back in the day when he was trading that stock. And he made a lot of money, but he gave back a big chunk of his profits. And he felt exactly like that. He was out of sync with the market. It kind of went one way, then quickly went the other way. And he tried to get in again, and he got burned. And he ended up saying, I have to step back. And I believe he said he didn't trade for something like 6 months.
Wow.
Because it was a bad market at the time, and he just wasn't in sync. He didn't feel like he was in the right mode to be investing. So, as we say all the time, cash is a position, and managing your risk is so important because once a new uptrend begins, you don't want to be in a hole. You want to be sitting on that pile of cash and trying to add to your gains.
Absolutely. Scott O'Neill always says, don't let one mistake become 2.
Yeah, that's absolutely right. And I know some people have rolled the dice and they've bought a stock right before earnings, which of course is really tricky. If you're not sitting on those gains, it makes it hard. I like what you said, Irusha. Let's go back to that. You do a lot of your heavy-duty research on the weekends, and that's something that everybody can do a little bit. So we talk a little bit about that.
Yeah, it's funny. It took me a number of years to figure that out. In the beginning, I remember, especially when I started out just a subscriber at IBD, I would be reading the paper on the train. I was in Boston at that time, riding the Green Line and reading the paper. And I'd find myself missing out on a lot of these breakouts, right? And then I was like, okay, let me try to do it in the weeknights. Well, once you come home,
from
last
work,
thing
you're tired.
Exactly. Yeah, it's the last thing you're going to do is do the research on the week during the weekdays. So what I found eventually is that dedicate a couple of hours on the weekend to just sit down and go through charts. And start out small. Go through the IBD 50. Go and see which stocks are setting up, where they are. Maybe you can get into them, do some research. And then let it become a habit. I think that's the key. Maybe do that for a month. It's going to start becoming a habit. Then you can slowly increase it. Now, these days, I'm looking at 300, 400 charts easily. If I have more time, I can quickly flip through even more. And as a result, the way I stay on top of the market is just look at a lot of stocks.
And as a little plug for MarketSmith, the tool, it makes it very, very easy to do that. I know a lot of people listening to that would say 400 charts?
Right, yeah.
That's impossible.
But you're tabbing through them so fast.
You are, and you're pre-running your screens. You can set screens that are already set up by MarketSmith to look for like the IBD 50 or the MarketSmith Growth 250, or you set your own parameters. You want to look for something. Let's say we're getting close to the beginning of an earnings season. You can set the screen to say, show me who's got a 95 or higher composite, got the EPS that's been accelerating for a couple of quarters, and is set to report earnings in the next couple of weeks. You can run those kind of screens, which really boils it down to the cream of the crop, and then you can look at the chart from there.
And right here in my notebook, I have printed out, in fact, Irusha and I were talking about this, the earnings coming up. And because I'm covering the videos a lot, and so I have to remember who's reporting when we get into earnings season, and I have all the dates. You can sort it by date, and it's a great little screen. You just run it, I printed it out, and then I know who's reporting every single day.
Yeah, well, every quarter, Amy, we're saying the same thing at the Santa Monica meetup. We're always like, earnings are coming up, make sure you know your date. I mean, we really should just record it, just play the recording.
You should play it over and over again, yeah. But it does, if you're ready for those, I think the key there is, if you're ready with that list, and then something does break out of a base, and you've had it on your list, they're going to report earnings, and they report really well, that can be a fantastic time to buy something.
Absolutely. One of the keys to success for me, at least, or something that I've done well, is that I've just paid attention to the stocks reporting earnings and the reactions to it.
Absolutely.
That's really helped me a lot.
Absolutely.
And the way I look at it is now, if the stock breaks out powerfully on earnings, and if I get in it, I have 13 weeks to get a cushion before the next earnings season. And so that's what gives me the chance, as opposed to if you buy a breakout and it's only 4 weeks before earnings season, you don't have as much time.
It's so important, that point you just made, because it's all about staying in sync with the market cycle, whether it's being in sync with where we're at in a larger bull market cycle or where we're at in terms of earnings season and the stage of the different stocks and the different bases that they're in. It's absolutely crucial. Otherwise, you're behind the 8 ball the whole time.
Absolutely.
A couple critical things that I look at are when a stock is reporting earnings, if they really blow it out of the park, and how do you know that the institutions are in there? You're going to see it on that huge spike in volume, that they've gone in there, they liked the numbers that they saw, or they like the forward-looking guidance, or both. And looking for, a newer, innovative company, somebody that's doing something right, something that, is in big demand. And then I look for liquidity. I'm going to look for the thinner stocks are a little trickier to play. We can play them, but if you do, you just know they can be more volatile. So you look for a liquid name, and boom, you're done. So by running these screens on the weekend, this is how we build our portfolio. This is how we build our wealth.
Yeah, and you mentioned one thing about that huge volume coming in. One thing, especially after doing post-analysis last year, one thing I noticed was that I was trading too much. And that's a symptom that not only, the symptom of the market, but it's also a symptom of me. It's just getting a little too excited. And so what I've kind of committed this year is I'm mainly looking at weekly charts. And it's kind of removing more noise. It's definitely decreased the amount of trade I'm doing. And during the earnings season, I'm seeing those huge volume spikes.
Let's take a quick break there because that's a good segue into the next segment where we want to talk about how you've been adjusting to this market this year that has been very challenging for all of us.
Okay, Irusha, so you were talking about using weekly charts.
Yeah, this year I've kind of gone back. I've recommitted to the importance of weekly charts. And it's kind of funny.
You're in good company because Bill O'Neill pretty much uses weekly charts.
And that's what I was just going to bring up is that, in the end, you kind of veer away. And so I was studying daily charts a lot more and found myself that I was trading quite a bit over the last year. Now, going back over these last 4 or 5 months, my trading's dramatically dropped. I've found that I've held my positions a lot better. And, of course, in the back of my mind is, once again, Bill was right. And you sometimes have to kind of break the rules or, go and test it and go out in your own way, figure it out and see if it works for you. But a lot of times it's amazing at how Bill is right and a lot of these rules are there for a reason.
Irusha, another thing you were talking about with the weekly charts, in the current environment, you said you were not as greedy. You're taking maybe some smaller profits. Why don't you talk about how that might help people? Yeah,
I think one big thing, because we are in a choppier market, and you have to adjust to it. Not every breakout is going to work as well. You may not get that 20%. A lot of times I'm looking at 10 to 15%, takes them off the table at that point. I've found that the incremental selling has helped me a lot over these choppier markets because you don't have to be right as much that time. As long as you're just taking some profits when you have a chance and selling the way up, I've found that really helps me.
And you were talking about this being a more advanced market. It has been trickier, so you're having to adjust the way you're trading. For people listening, especially if you're newer, this just hasn't been a typical easy can-slim type of market.
Yeah, I think for any beginner, when they're getting started, you're never going to get in the right market. When I started, it was the 2000 markets. All I learned was to sell very well for 2 years.
It's a good lesson to learn.
It's a very good lesson to learn.
I don't know. That was probably a good lesson for you. When I got into it, it was easy. It was the 90s. Yeah. You could circle the new highs. Whee! Here we go.
That might. Yeah.
And then 2000 came, and I said, maybe I need to learn to read charts a little bit better.
Exactly. Yeah. So it's so you're never going to time it unless you're Amy. You're never going to time it. You're never going to time it very well. But that being said, you want to really get down the basics first. These days, if I'm going to try a breakout, the minimum is 40 to 50% volume coming into it. I'm looking for 100% volume.
Yeah, I agree. The bigger spikes in volume that we've been seeing as I cover the market rep videos, and I know, Matt, when you do your videos, the ones that are working is when I'm seeing monster volume going into it, because that really shows a little bit more commitment. If it's a weak breakout, 20% volume, 30% volume, it's dicey to play it.
It's a key point in this market because you want to tighten your buy and sell rules, not loosen them in this market. Don't go for that. I know this stock's about to report earnings. It's going to pop. I'm going to make up all those little losses that I've had in the last couple months on this one stock on that one day. And, of course, maybe the opposite happens.
Yeah. So pullbacks, looking at pullbacks and studying to see, okay, how are they acting as they pull back to a key support area? And weekly charts have helped me out with that. It's like, hey, here's the 10-week line coming up. It should hold here. So all these kind of things. These markets, they are tougher. They're great learning lessons. They make everyone increase their skills that much better. So look at it that way. It's a frustrating market, but great opportunities. That being said, too, this is a stock picker's market. There are some opportunities out there.
There definitely are. Mm-hmm.
One thing that I've also learned over the years is that the more you study the great winners, the better you become at recognizing them from a story aspect and a concept aspect. Right. You just start seeing some of these newer stocks and like, wow, these guys really are changing their whole industry. Yeah. And you just get better and better at that. So all of this, you're not only over the years, you're not only compound your wealth and get better at that, you're compounding your knowledge. It's amazing at how much easier it is to identify some of these winners. Now, managing it, that's where it's at. The buying part is easy. Finding the ideas are pretty easy. IBD makes it too easy, in my opinion. But managing it, that's the lifelong lesson. And that's why always when you see Bill and you hear how he handles some of these stocks, I just have the utmost respect for that because it's amazing how he's just studied this so much. The way I look at it is that, in my opinion, no one has studied the market more, at least for growth stocks, ever in the history of the world. He has just focused on this niche and really identified it, and it fits his personality. He built the whole system around his personality.
And also to encourage people out there, we will get into an easier market. I promise you, at some point, we don't know. Yeah, I promise, Irusha. I don't know when that's going to happen, but because we've all been around for a while, we've been through different market cycles. You might want to talk about that too. When you talk to people on the phone, people that have been around for a while sort of realize it's frustrating, but we'll get into an easier time.
Yeah, I've been doing this for 15 years now, I guess. So I have seen enough markets to keep in perspective. It's funny, though, that even people who maybe started 5 years ago, they really haven't seen the better kind of markets. I think the one market, the decent market that we've had where you really had a great chance to do really well in using CanSlim was 2013. Where that everything kind of lined up that year. Now, all the other years, there were a number of opportunities. I remember even Bill in the level 4 said that, with the market finished maybe up 12% or something, he said, you should have doubled it. And, looking at, there were opportunities to do that. That's definitely true. But there are better markets where when the markets trend, when everything lines up, these things will work better, and everything's a cycle, right? And so everything will change, so those days will come around too.
And in the meantime, not to harp on it too much, but manage your risk.
Yes.
Protect your portfolio in this type of market.
Yeah, well, what's one thing, we were talking about this yesterday, is that it seems like people I talk on the phone, people in the meetup groups, stuff like that, it's everyone's giving up, right? And honestly, and I sometimes want to give up too, and I've been doing this for a while, and I'll go through phases where I'm just... when you're wrong like every day, like for a couple of weeks, you want to give up on it, right? So it's psychologically, it can really get to you, and so that frustration's normal there, but you just want to keep going because there are better days, and it's interesting to speak to people who remember the 70s. And how choppy and how tough and how negative and the bad news is everywhere there. And in 79, I think it was, Business Week put out a cover, The Death of Equities, right? No one's ever going to play stock market again. And then early 80s, you had this pretty brutal correction where I think it corrected 25% or 30%.
And a very ugly recession at the same time.
Yeah. And then 82, here it goes, when everyone's giving up on stock market, it launches a super cycle, right? Now what do we hear? We hear a lot of people can't make money in the stock market. I just get this feeling that everyone has given up, and so we are getting close. Now, we probably need a decent correction, which I know we're all looking forward to because we know we'll protect ourselves during a correction. But we're getting close. You can feel it. When you see everyone giving up.
That's the time. That's always when the market will do something different.
Exactly.
Always.
Exactly.
And at the same point, in 2000, when everybody, including your barber, when everybody's in the stock market, that's when it crashed.
Absolutely.
Stay engaged, stick to your routine, and learn. And then the profits will come.
Yeah, it's always consistency.
I'm like, hey, whatever, man.
Well, Irusha, thank you so much for taking time out of your day, coming into the studio here and recording with us. I know people love to hear from you. And Irusha, if some of these people want to listen to your webinars, tell them how they could take a trial.
Well, MarketSmith.com, there's a free trial there. You can always take it. We do webinars every Tuesday. And you can always just hop on for free. Just take a free trial for that.
All right, so you can find out all about that at MarketSmith.com. And we'll also have links to that, the free trial and the webinars, on our website, investors.com/investingshow.
Successful investing starts with a successful strategy. Since 1998, the CanSlim investing system has been the top growth strategy according to an independent study of over 50 leading methods. How can you use the CanSlim system? Start with the How to Make Money in Stocks book series, which has sold over 2 million copies. See the rules, routines, and checklists you need to stay profitable and protected. Get your copies of the How to Make Money in Stocks series at investors.com/radio show. That's investors.com/radio show.
Now, the final segment of How to Make Money in Stocks with Investors Business Daily.
Be sure to come and join me next Saturday for a Leaderboard Summit in St. Louis.
You can get details on that and also check out links to the MarketSmith Webinars with Irusha and see our series on how to handle choppy markets at investors.com/investingshow.
Okay, see you next week, everybody.
You've been listening to How to Make Money in Stocks with Investors Business Daily, featuring Amy Smith and Matt Galgani. For more stock ideas and investing strategies, and to subscribe to the free podcast of this show, log on to investors.com/radio show. That's investors.com/radio show.